This is about as bad as it gets. I mean, and this is all tied, I think, to the deep slump that we've seen in the Chinese construction sector, the Chinese property sector, and that has to reverse at some point. If China's going to grow at 7% per annum, sooner or later they're going to need to build more houses, and they're not at the moment. Right? As soon as we get any kind of pickup in industrial activity in China, we'll see the leverage of that into the commodity prices and see the leverage of that into the names like Glencore.
The combination of the trading business together with the mining business, this was going to help Glencore be more or less immune from these wild fluctuations in the commodity cycle. Clearly that's not happened, and clearly that is another concern that has been weighing on investors' minds and why they've been selling down the shares to these levels. But certainly Glencore, one would imagine, still believes that you know, there are compelling reasons to have these two together. If you know what is coming out of the ground, then presumably you're in a better place to price it and make the most of that business.
We're reducing costs. We're trying to rationalize our investment program. We've reduced our capex program year on year and on a continuous basis, and we're looking at returns that are very different in terms of short-term paybacks versus longer-term paybacks in the short term. But long-term, you know, I still think you know, we're seeing lows that we haven't seen in 6 years. I think we're still hopeful and confident that things will come back to a more stable level.
Stimulus is an easy thing to focus on. In reality, as many miners start to cut production in copper, nickel and zinc and other metals, we should see prices rebound quite naturally. So if the two of those coincide, then we might get quite a good uplift in prices around the year end.